Alright guys, welcome to Educate, Execute, and Empower. And today we're going to be talking about yesterday's trading that I did, which it was November 19, 2018. I'll be talking about AKER, AKER, and YECO, YECO. Um, Pretty good day, made quite a lot of money. It's pretty nice, neat trades, in and out pretty quickly. That's the name of the game. um, that's how you're supposed to do it. You shouldn't be. The longer you stay in the market in a position, the more chance something is going to go wrong. And obviously, the less the risk, the more comfortable you'll be. The less the emotion that will run through your body, obviously. So basically, for AKER, there was recent news. We'll see. Let's see where it was. It was some legal advisor thing, something to do with Europe and cannabis industry and being accepted or somewhat like that. All right news. But if you see from the long range, from the 1 year chart, as discussed in my first video, you'll see that it was the stock wasn't holding its gains. Like you see all the runs, there are lots of bag holders. See the first run, you couldn't see it, came back down. Second time went up, came back down, came back up, came back down, and this thing it just crashed so badly that there were gonna be um bag holders at the 275 range, 270s, 260s, 250s, and that's what happened. It just went up, but it just crashed. It just started coming down almost immediately because of the bag holders who are just trying to come back out even out of their position. They're mostly beginners who do it. The experienced traders don't really bag hold because they know what the risks that come with it. Beginners still do it. I've done that when I first started in my like the first 5-10 trades. Well, I didn't have to hold my first 5-10 trades, but my first 2-3 trades I did bag hold because it went wrong. Um, so basically the stocks started running because of the pre-market, because of the news, and I knew that if it was gonna run that much, there was gonna be some major pullback. Um, so basically, there was a good pullback. It did come after hitting 3. The resistance level was already there from before, from the previous, and that's a good thing. You guys should be doing that too. As you guys trade, it's good to have resistance and support levels. Just make them the same color, but just have them there, because if you're gonna look at the stock later on, you don't have to go back again and see your support and resistance levels. It's much quicker. You know when to buy, you know when to sell. It's simple. Makes your trading a lot more simple. Less emotions are involved then. So basically, when the stock went up to 3, I knew it was going to be a major pullback. Went back from the 3 basically to the 265s, and then when it opened, it fell down to the 235s. Well, you guys might be saying, why did you buy into it? Well, I bought into it because I saw there was support right here, VWAP right there, and there was also some support at the 230-ish level right here. As you can see, when it broke out, went up, and then it came consolidated for a little bit, dipped, and then broke out back above, and that thing's low was basically 239, 240. This thing's high was 240. So when it came back down, you could see like, okay, this is a reasonable level that I could come down to. Came down right here, but I bought at 250 because that was like the major support you could see from the long term, as I have drawn over here. So basically, when it did bounce down and it started coming up, that's when I bought it. You shouldn't be buying it when it's falling because that's just dangerous. If you guys have heard the term of the falling knife, you never want to catch a falling knife. It will hurt you pretty bad. It will cut you up, so it'll get bloody. So basically, that's what I did. I let it bounce, saw the support. You could see from the bids stacking up. When I say stacking up, I mean like if it sees 167 right now, it'll say 167, 167, 167, 25, 10. It'll start like stacking up on one price level, meaning there's support there. So when it did fall down, and I saw that VWAP was curling up with it, getting closer, that's a good sign. And then when it started bouncing up, I'm like, okay, so it either hit VWAP and 250 is holding, so that's a good thing. So I bought into 250 when it went back up, and basically it moved up. Didn't really give me much hesitation. I was ready to sell if it did come back to the 240s, or if it broke under 250, but it just went up, went to 250s, went up again, completely didn't hesitate. Not much choppy action. And when it opened up on the next level, I was out at 3. Simple as that. Didn't want to take a chance. Some people might be saying, oh, why did you sell that early? Because if you could see from the 1 year chart, like I already told you, it wasn't going to hold its gains. And if it did go higher, good, I would have bought it on a dip or somewhere. I just wanted to lock in my gains because this was a big gain. If I was in a trade with $2,000, which I was, I basically made $380 in 2 minutes. That's a pretty good trade, and that's what I want to do. Just in and out pretty quickly, less risk, less emotions. Simple. So basically got in 250. My plan was get in 250, which I did. Um, Sell at $3, which I did. My risk reward was 5. Usually, 3 would be the minimum risk to reward ratio, so like 1 to 3. And if you're seeing reward to risk ratio, it would be 3 to 1. So I should be getting three times more than the risk and how much I'm risking. And my support was 240, like I told before, just like an easy way. You should account for slippage. Slippage is when pretend your support was 240. If you can sell at 240, your order might get executed at 239, 234. So you might want to add that into your risk reward, so you know really how much it is, including the slippage, so you'll be comfortable with it, comfortable with your trade. So that's what I did. 5 to 1, pretty good trade, $380 in 2 minutes. I was good with that, and I was about to close my I'll close the program down, close it to my Thinkorswim account. I'm like, okay, I'm good for the day. But then another uh, opportunity arose, and that was YECO. YECO, a former runner. I just remember it because I've been trading for some time now, some years, and I saw it. And when you look back, obviously you can see this runner. No wonder it'll be in your brain. You'll be keeping in mind of it. Went from the 2s to the 13 in one day. That's crazy. Next day opened up, couldn't hold its gains, crashed back down. Lots of bag holders around this area for sure. I don't even have to think about that. And then basically, as more bag holders come here, and then when it spiked up here, obviously bag holders didn't let it spike much. It held like half its gains, I guess, but there were bag holders came back here. Bag holders didn't let it spike, came back down. Probably the bag holders that missed on this opportunity didn't want to miss again, so it sold over here. And then basically, and you guys might see it's kind of like rushed up right here. If you can see all these lines and stuff, it's just my support resistance. I'm getting used to it. Might start like using clear graphs from now on, but for now let's just use it like this. And then you can see chart and starts bouncing up right here. I saw that. It's gonna be bag holders, obviously. You can see if all these sellers or all these buyers over here have held and they're seeing this, they're gonna look for any perk up, they're gonna sell into it, and that's what happened. But obviously there was a really big run up. You gotta admit that's huge. It went from the 5s all the way to the 750s. Obviously I never held that long, and I never saw this move right here. I came into my scanners right here around this area when it spiked up. I think it was a halt, or no, never mind. It wasn't a. I don't think it was a halt. Yeah, it wasn't a halt, but when it spiked up here, it dipped down. But I saw already, as I told you guys, the rule for this market circumstance right now, the market situation. If a stock breaks out from its initial resistance level, like right here, this was the initial resistance level. It broke out. It was staying there. It held up there. But then when on the second candle, the candle next to it, the next 1 minute candle, it came back down. That's a dip buy for me because it's holding the breakout level right here, which was approximately 608, 610. It came back down, came a little lower, but VWAP held it up. When it started making a move back up, I got in, I think 625 was it? Yeah, 625 around here. So basically, when it reclaimed the 625 level right here, as from before support, I never drew that. That's from before. Again, you see how it all helps you out. You don't have to draw anything, and you just know that's where I got in, and that's somehow, is it a coincidence or not? 625 was a support, and that's what it was. I got it 625. It moved back up. I think it did come back down below 625. I was getting ready to sell it below 6, like at 605 if it did break. But then after coming back a little down, went back up again. And next candle, didn't have to worry. Even though it perked down, view up, still above view up, and it just spiked back up. And that was a good sign. And next candle started breaking out, and my level was $7. I always have a plan. You guys always should have a plan. It helps you control your emotions, especially for beginners. You need to have a plan, especially a risk to reward ratio, which helps your emotions and helps you with your confidence when you're trading. So basically, I got in at 625, let it run, I was getting ready. If it did fail, $7. If it did fail a little bit before the $7, I would have sold. But I sold it at 7. Um, I think a better idea would have been to sell it at 6.95, just to be safe. Because especially in this market, usually stocks will just fail right before the key resistance level, as people are trying to like outsell each other, trying to sell before each other, so they'll bring the bids down. But I sold at 7, saw the strength. 7 was good. It did go higher, obviously, went to 740s, which was I think a resistance level from before. I don't think I drew that. Yeah, I don't think I drew that, but it did go to 740, perked up to 750 on a new open, but that engulfing red candle, not a good sign, meaning it's kind of bullish, and that's what it basically was. Did come back right after that. For that trade, I was in and out in 4 minutes, basically got in here, 1, 2, 3, 4 minutes, yep. Um, that was also a risk to, or the reward to risk ratio was also 5 to 1, which is good as well. My support was 611, as I told earlier, right here. Um, and basically my profit was $220 in 4 minutes, which is great again. So on the day I was probably up 380 plus 220. That's 400, 600, I guess. Yeah, I'm not so good with math, guys. Just saying. Not so good. That's not my main, you know, thing that I'm good at. Well, I really don't care as long as I'm quick enough for basic math to get in and get out of trades. That's all I care about. Yeah, so it was $600, just making sure. Yeah, and that I think I was gonna say that's it for the day. I'm over, but I saw the stock. It when this happened, I was like, okay, I'm not gonna short it. I don't think there were that many shorts available. So that was a good thing. Meaning, if there are not many shorts, there are not gonna be many sellers to open up a position in short position. Meaning, there won't be that much selling pressure. Meaning, there's more chance of it being a bounce, right? Because buyers stack up, less sellers. Obviously, basic economics, more demand, less supply will cause an increase in the price that people will buy it at, and that's what happened. Came back down here. I thought it was done because it hit view up, especially this part right here. When it came down, bounced, shorts got in over here again. Shorts got in over here, right here, and when it came back down under view up and it tried to go back up and it hit that part, that's where shorts would have possibly gone in as well. That's why it was red, big red candle. And then we tried again, shorts decreased a little bit because it wasn't breaking down like it should have. Because if it came up right here, most likely it should have came back down, but didn't. And it came up, made a slightly higher low, and held the low again, which is a positive sign for the bulls, but a bad sign for the shorts. And that's what happened. The shorts that were in, they had to cover when this thing started breaking out above VWAP again. And some of them did cover, especially these people right here, most likely, which made this kind of perk up in the price, and it went above VWAP. Problem was, um, these short sellers over here, they're probably waiting for it to come back down under VWAP as like a final blow to the stock, saying, yeah, it's not gonna come back up. All the bids were gone, all used up, and the seller just overpowered them. Instead, the stock actually held its VWAP, actually held it, and it made a support level over there. That's when I took advantage of it. I saw it, chances of a short squeeze from this level, with the shorts most likely gone over here around the 680s and the 690s and 720s basically. And that's what I did. And when the stock started perking up right here, and if you guys can't see, I do use the 1 minute and 3 minute candle. And on the 3 minute, it's very clear it was gonna be a perk up for a stock, for a spike. So you can see right here, went up, perked down here, and the support right here was 654. That's my support for the stock. That's my second trade. So basically, yeah, I got in at 680 right here at the break of basically its high, even though it's 681. But when this opened up over here, started moving higher, just wanted to get in before it crossed 681. Probably gonna be a gap up kind of thing. It's gonna skip over some bids. I am pretty sure that's what happened. But I got in at 680. Luckily, I thought it was gonna get filled, but I did. And I sold it at 740 right there, which was previous support. Yeah, if I could have gone a little safer, could have sold right here at the 730s. But I had a feeling it would have gone to 740s, and I did. If you switch back to 1 minute, um, 1 minute, yeah, I did go to 740s right there. It went to 750, but I sold it at 740, 739, I think, or 740. I'm not sure, somewhere around there. It was a 3 minute trade basically. One, two, three. That's it. Um, uh, yeah, the risk reward was a little lower. It was 3.75, basically four. But it was still better than three. Three is my minimum. I accepted the trade. It shouldn't have actually. Just is why you put more risk if you're up on the day by $600. That's really good, especially despite being in a position for what 6 minutes and making $600. It's like $100 per minute. That's a really good ratio. Um, but yeah, I still went in the trade anyway. Lucky I got out. It was a good plan though still, so that's a good thing. Made $156 in 3 minutes of the position. So basically on the P&L, profit and loss on the day, I made $750 and some change, maybe 756 I think, but $750 in around 1.5 hours of being on the computer. But if you say how many minutes I was in the position, that was what, 9 minutes. Yeah, 9 minutes. 9 minutes made $750 in 9 minutes. That's pretty good, guys. Um, that's what happens. The more you focus on trades, if even if you don't trade, if you paper trade, which is like fake trading, we have your own account, which is free with most platforms. Even if you paper trade, you get comfortable with your strategy. You can follow my strategy. You can make up your own. I prefer you just get to know mine a little bit, so you guys can learn from that. And then once you understand my strategy, you can take some stuff that you don't like about it, that you don't feel comfortable with, so you can better your entries and exit points. And that's what I did by following other people. Even though it took me 3 years to do it, I wasted 3 years of my life on YouTube just looking around, which is a pretty bad thing. So yeah, that's what happens. Just look at others, adapt what they do, learn what they do, and just make your own strategy better from upgrading from theirs, right? That's how it is. You just keep upgrading until you get really efficient at it. And that's what it is, guys. So the key to trading, just want to give a few quick pointers that you guys should know is, um, in order to be successful in trading, you gotta understand other traders. I'm not just talking about yourself. Obviously, it's good to you should understand yourself. That's a minimum. Like if you want to be like satisfactory, you have to understand yourself. I mean, like what gets you emotional in trading, what gets you frozen in trading, like what patterns you don't like, what patterns you do like, what keeps you comfortable. Does the risk reward above 5 keep you comfortable? Does risking a loss of $50 maybe compared to 2,000 with $2,000 on the line keep you comfortable? It just all depends on you and how you trade. That's why I'm saying get into paper trading before you get into real trading. Paper trading, it helps you a lot more, um, because with paper trading you'll figure out your strategies, and also you won't lose money that you have earned with your hard work, obviously. Um, and that's a good thing. But obviously you will have like a kind of like a culture shock when you do first start trading, because you'll be like, yeah, I'm good with this and I'm good with this. But when you start thinking about it, like, shit, I'm putting my real money on the line, yeah, obviously emotions are going to kick in, right? But you just have to get used to it and just have to trust yourself. Just believe that whatever you practice will work, and it will, even if it just works 70% of the time or even 80% of the time, that's pretty darn good, man. Like, you'll be making what, $600 like me, even more like 2,000, 3,000, 5,000. I know people who make 10,000 in a day. It's just about how much you risk and what kind of patterns and strategies you like. It's just all up to you. And obviously, don't compare yourself to other traders. Look at yourself, look what you like, because most traders that I was looking up to or learning from, they were just too risky. Obviously, they had a lot more capital. So I don't know how they started. They wouldn't tell you that, but they just told you how much they made at the time. So kind of like a scam, but not really, because some of the strategies did work, but I wouldn't recommend it. But that's what it is. You just gotta know what you're doing and what strategy patterns work for you. Second pointer that you guys should know is, use technical indicators that are widely used. You guys might have heard of, what do you call it again? RSI, Relative Strength Index, VWAP, EMAs, SMAs. EMA stand for Exponential Moving Average. SMA is Simple Moving Average. I do have it on my like 1 year kind of chart. I do sometimes change to 1 day, but It really doesn't matter to me. I just use VWAP and just regular patterns and trend lines. That's all I use. Some people also use MACD. Um, yeah, but I just use support resistance lines, VWAP, and trend lines that I make myself. Pretty simple, guys. To be honest, that's how trading should be. Simple. Obviously, you guys can up it up a little bit to get yourself more excited about it, or to give yourself more confidence, because obviously technical indicators are there to give you more confidence. They don't necessarily mean whatever you're gonna do, if whoever hits is gonna be right, or whoever they tell you is gonna be right. It just gives you more confidence to assure you that this trade is more likely to be successful than not if you're gonna go into it, right? That's what it's about. And I'll give you VWAP if you guys don't know what that is, volume weighted average price. So basically, it's just telling you that based on the volume, that's where it should be. On the volume and people buying it, it should be at this price. But buyers obviously pushing it up, and meaning it's a positive thing. If the price the stock is above VWAP, it's a good thing. If it's underneath, it's a bad thing. If it crosses from the bottom to the top, it's a good thing, meaning buyers are coming in more than sellers. If it goes from the top to the bottom like it did over here, means a lot more sellers pushing it, meaning there might be something you don't know about it, meaning there might be more sellers because it's overextended, right? And that's two things I want you guys to know about understanding other traders, meaning the beginners and the experts. I do focus, and that's how I know if there's gonna be a short squeeze or not. Like I knew over here if there's a short squeeze, got into it, took advantage of it, and that's what you guys have to do, man. It's psychology. It's like everything about stock trading. Mostly it's about psychology, knowing what you're gonna trade and what you think about and what others would think before getting into a trade, and how to take advantage of them. That's what it is. Second thing would be to understand yourself, know what strategies and patterns you like. Alright guys, that's my basic breakdown of the stocks that I traded, my trading day for November 19, 2018, and I hope you guys learned something, because that's what it is. You guys gotta know what trades you like, what patterns you like, what keeps you comfortable. If you guys have any questions, please hit me up on the comment section, so I can help you guys answer some questions about anything like technical indicators, about experience, my experience from before in stock trading. Have any problems I can help you guys with? Just hit me up. I've experienced a lot. Obviously, I'll probably be making videos about that as well to make you guys feel comfortable with yourselves and with your trading abilities, because I wasn't a good trader. No one's really a good trader. You just start off like a beginner, but you work your way up. That's what I did. So basically, guys, comment down below, hit the like button if this video helped. If it didn't, you can hit the dislike button if you want, but just hit me up in the comments and tell me what I should improve on. Helps a lot, obviously, because I'm helping others too, not just for myself. Obviously, it does help me too, but it's mostly for you guys, since I was at the same place as you guys, and now obviously I was so close to quitting, and luckily I didn't. I pushed through, and now I'm here. I'm making $750 at a minimum, and what, 1.5 hours on the computer. Pretty good day. After that, I just enjoyed myself. Went to the store, went to the mall, got some stuff. That's it. Other than that, guys, remember to subscribe. Um, so I could be like more of an inspiration to everyone else on YouTube, and save others from being scammed by other so-called experts in stock trading. There are no experts, just experience. If you're experienced, you can help. You can be an expert. No one knows the stock market. No one knows where it's gonna go in the future. You just guess. And other than that, guys, just let me know in the comment section what's your guys' favorite technical indicators. Mine's VWAP, as you guys can see, and I just used trend lines, and price levels as I showed over here for support and resistance. But my VWAP is my favorite technical indicators. What's yours? Hit it down. Tell me in the comment section. And till next time, guys. Peace.